Well, let's return to Europe now. We're joined from Singapore by Grant Williams, who is the strategy advisor at Vulpes Investment Management and author of the investment blog, Things That Make You Go, well, Grant, welcome to the programme. We see VIPs winding their way back from Davos now, and we're hearing lots of warm noises about things in Europe getting sorted. Are we near a solution?
I think we're near a solution for sure. The problem is, what kind of solution are we going to get? Is it going to be a controlled solution, and the solution that the talking heads seem to be working towards, or are we going to get this disorderly default that everybody's so terrified of getting? I mean, my own feeling is that there's a monetary watershed coming in March 20th when Greece needs to raise 14.7 billion euros, but it may be that the political process breaks down before that.
Tensions between Germany and Greece seem at an all-time low, with these comments about the fact that Greece should really hand over control of its fiscal policy to someone else.
Yeah, it's very, very hard to see that happening, and this may be some form of engineering in terms of making the political process get to the point where either Greece are forced to leave or there's enough political will against Greece staying in Germany for them to try and kick Greece out that way.
Have the European leaders, we're very critical of them, of course, but have they done anything right? Has Mario Draghi been any good at the bank?
Well, what Draghi did in December with the LTRO was actually a very, very clever means of funding the banks.
I should say that means the long-term refinancing option, isn't it? That's the restructuring.
Yes, that's right. That's right. Sorry, what they effectively did was loan very, very cheap money to the European banks, and I think the quid pro quo was that money would find its way back into government bond markets, and we've certainly seen yields come off in the short end in places like Portugal, I beg your pardon, in places like Spain and Italy, which were the crucial ones. But on the other side of the coin, you've got the politicians overtly saying they won't be printing money, so there's a bit of confusion about what's actually going on.
So are they actually printing? Because that's exactly right. I mean, Angela Merkel saying that they will not print money under any circumstances, and yet you're saying this is effectively backdoor printing of money.
No, absolutely. And the ECB balance sheet is expanding far faster than that of the Fed. But the problem they have is they've kind of almost with a nod and a wink told people they're going to print money, but on the face value of it said we're not going to. And that nod and wink hasn't actually got through to people straight away. It's starting to percolate now, though.
As it percolates, we've got apparently another one coming in late February, another one of these refinancings of up to €1 trillion, I gather. What is that going to do to the value of the euro itself?
Well, it's certainly not good for the value of the euro. It depends. I mean, with the first one we saw was 489 billion, and the bulk of that stayed on bank balance sheets over year end to help with their own funding. I suspect the next one, which is Feb 29th, again, people are banding around the number of €1 trillion. It could get that high, and I suspect we'll see an awful lot of that money flowing into government bonds.
Presumably, if the euro does fall, Germany would be delighted about that. That'll keep their exports growing. But then America's going to react with another level of quantitative easing, of money printing on their side?
Well, we're in a world of competitive debasement, and last week's FOMC meeting, they came out and made the extraordinary move of having said that they were going to keep rates low until 2013. They extended that to 2014, despite some fairly decent economic figures coming through. So I think that was a shot across the bow that the US is not going to let the dollar strengthen materially because it's going to be too painful for them to do that.
So, Grant, what does this all mean for gold? Because I know that's a commodity you keep a very strong eye on. We've had quite a correction, haven't we?
Yeah, it fell roughly 18%, I think, into year end. And I think whether it's a correction or a collapse depends on where you bought gold. I think all those people that have held gold for several years saw it as a correction. Anyone who bought it at 1900 saw it as a collapse. But the simple truth is it didn't break its long-term trend line. It's acting as a currency, and right now it's the strongest currency in the world because you can't print it out of thin air. So I think things look very good for gold going forward.
All right, just finally, no one's put the blowtorch to the Occupy igloos in Davos, but I do see that Royal Bank of Scotland, RBS's Stephen Hester, it's all big news over in the UK. He's now refused his £1 million bonus in Britain. Is this the rebirth of birth of responsible capitalism?
I think refused is perhaps not quite the right word to use, but look, there's going to be pressure
you think he was pushed
when there's
into
enormous amount of... I can only speculate, Tiki. But I think there's an awful lot of pressure being put on people to do things the right way, especially with so much taxpayer money at stake. But ultimately, it's a political process, and you have to remember there's a lot more political movement made by finding a villain. If it's an expensively, highly paid banker, then so much the better.
Well, we'll see whether he sticks around. Thank you very much for joining us, Grant Williams.